See, what's the broader message from the market? That one-day crack has not really had a snowball impact in terms of global financial markets. The number one indicator which I look at, and which in a sense was the most important indicator when markets fell in the beginning of August, when the yen carry trade was unwinding, and our viewers know it, it is the VIX. CBOE VIX. Let's look at that. If there was fear, nervousness, or if there was a fear that volatility could come back, then CBOE VIX would have shot up. It's at 21.5, elevated but not scary. Point number one. Point number two, commodities are going down in a measured manner, which means that what we saw, let's say in global markets, today's Thursday, which is on Wednesday and Tuesday night, was more like a profit booking triggered by a ETF selling which happened because of Nvidia, that has not translated into any scare in other asset classes. So you may want to use the word, and the choice of words this morning for me would be uneasy but calm in global financial markets. And typically when you go through this patch of uneasy calm, when markets are trying to find their feet, you may not see big moves, you may not see big spikes. It is not the best time to participate, but it is also not the best time to sell. So it's that phase of the market where you just find market very boring. You may find market doing nothing. Very few stocks will spike on both the sides. But in general, I think you should be ready for not volatility, but some rather ordinary days of trade ahead.
But I think what really stood out yesterday was the fact that we were just so resilient at a time when you had the Dow fall, the US futures, Asia taking heat from the fall on the Dow overnight, or the US equity markets overnight. Tech-led, yes, for sure, led by Nvidia and its damage on the Nasdaq that you saw. But the fact that we fell a whole lot less even at the session lows, and then from there saw meaningful recovery towards the dying minutes of trade. Of course, post-adjustment, we did close 100 odd points lower, but we were just a smidge in the red on closing, at least on closing bell. Having said that, it's the small caps which actually saw most meaningful recovery coming in there. They closed in pretty much only flat and around the day's highs, and crude sensitives, they really came to the fore and to the rescue yesterday. Everything from OMCs to paints, they were all holding out very, very smartly. But yes, financials, IT, they continue to see that spiral down. And I think that rotation is getting very, very evident now in the market. While the crude sensitives, Nikunj, may be a knee-jerk reaction, I don't know whether this is going to be a meaningful rebound or a recovery in store, but at least when it comes to financials and IT.
So Aisha, let's assume for a minute that crude becomes this backstop for the market, and at higher levels, global volatility becomes the pain point. So the markets will now have to, it will get a support or a backstop from decline in crude and the selling or the volatility which is happening in the global markets. Now, if that is the context, what may actually happen? Markets are not likely to fall in a very sharp manner, and markets are not going to take a giant leap forward. I think we are in that phase of the market. Within that, like Aisha mentioned, sectoral rotation, which we've been talking about, how money is moving out of defense, railways, shipyard, all that, all those categories, money is moving out. However, money is moving back into stocks which would benefit if commodity decline continues, which is crude consumers, OMCs, that packet is ready for a rally. B, if interest rates come down, which it would if inflation comes down and if global growth comes down, then you are looking at the sequence would be NBFCs, HFCs, PSU banks, and then private banks. That's one space which is getting ready. And see, if you really look at the communication which is coming from the government, it is evident that they want to fix and kickstart the rural economy. So the outperformance in two-wheelers, consumer durables, I think that, that interesting part continues. Interestingly for me, what really is different this time is that there is just no festival cheer. Yeah. There is just no talk about, okay, companies getting great orders. There is just no mention about, okay, long line. There is no mention about the sale, 6-day, sale, having products being sold out in one day. That zing in the market which was coming and which had come in 2022, 23, I think that this time around ahead of Diwali Dussehra is missing. So you could be in for a mood dampener in some of those high category, luxury, urban focusing categories, I think.
Yeah, though, I mean, to be fair, it's a little too early to judge that. Diwali is only in November.
Companies are not talking about it.
Yeah,
They're not stocking up.
Exactly.
Let me put it this way.